Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, August the 10th. And today was CPI day, so we had a big day today. The CPI was reported at 8:30 Eastern Time, and let me show you what that looks like. So there is when CPI was reported. Boom, huge move up there. We're straight up here off the CPI number. Basically, think of it like an earnings report. People are, there's estimates what they think it'll be. I mean, inflation's been running 9.1%. Pretty hot inflation. That's kind of what got us here where we are right now in the market. But the expectation was for a 0.5% increase, if I'm not mistaken. I think it was a 0.5% increase, and we got 0.3. I believe that's right. I've been looking at so many numbers today. But basically, the number came in a little bit better than expected, so we got a huge move here. Big bounce, and then a lot of consolidation here. Really, this is the light gray is before the market open, and this is during the day today. So a little flush down here. I was kind of wondering if we might retrace some of this. We didn't. We come back to 4,200, and then all day long we're just kind of chopping, and kind of a little sputter at the end to go out at 42.13. This is ES. So again, this actually makes it a little bit even more difficult to figure out what's going to happen next, because obviously, this is good news. Now the market is forward looking, so the market is anticipating, what this is going to mean 6 months from now, that type thing. And also on a near term basis, how the Fed is going to react to this, because the Fed is meeting next on September the 21st, I believe. And they were pricing in, I think it was about a 68% chance of a 3/4 of a point rate hike, and now that's dropped down quite a good bit, about cut in half basically. And there's now I think there's a 62% chance of a 50 basis point hike, still a rate hike, because we've still obviously got a problem with inflation and all that. But is it starting to simmer down or not? And the way they look at it is, we're kind of on a bell curve here. Inflation is increasing, and at some point, you start to kind of top out, and it doesn't get worse, and then it gets better and better and better. And this is when, as inflation starts coming back down, that's when the market, can really take off. Now this may be preliminary, maybe maybe overreaction. I don't know. It's too hard to tell from here, but apparently we seem to be kind of in this area here where we're starting to kind of top out. Now this is just one. We get, we'll have CPI every month, so if next month spikes back up, it'll be a whole different story. But this is, this is good news. Now we have PPI tomorrow and producer price index, and we'll see what those numbers look like, and then a lot of data coming out next week as well. So we're still, we still could go either way. Now let's look at the chart here and kind of see where we've been, and where it might take us. And again, I'm going to focus on the ES because that's the most relevant to the overall market. And as you can see down here, 37.23, and we've just been kind of chopping our way back up. Now this red line is a fire line, a voodoo fire line, which is an Elliott wave calculation. I did not really think we would get back through this, and we kind of chopped around, finally broke above it, came back down, retested it, came back up, came back down, almost tested it again there, and now we're back up here. But on a longer term basis, let's look. Let's go to a 1-year chart. And again, these are voodoo lines that you're seeing on the chart here. That's the low for the year, that's the high for the year, and that high, incidentally, if you see that white line right there, that is the start of the year, January 1st basically. So all-time high here, back down to 3,600 here, and now we're moving back up. Now this move so far has been 573 points, kind of roughly. This move was about 510, something like that. So I don't know if this keeps going or not. It's really hard to tell right now because, again, good news. Everything looks good. Moving averages have crossed back for the most part on the right side, and everything looks good. We're kind of through earnings season for the most part. Just really waiting on the next Fed meeting. So, again, this puts us more in limbo. I will say that since last week, I was saying, here, that I thought that the CPI number, if the number came in hotter than expected, we go this way. Well, it didn't. It came in cooler, basically, than expected. It's the right way to say it. So does that mean we go this way? And again, I'm just not sure. Luckily for us, from a trading standpoint, it's we don't have to make a call as to out here because for the most part, I don't think most people are trading that far out in time, and we're trading much smaller time frames now, and doing weeklies and things like that are days or weeks out instead of months out. It's just too hard to call. So the other kind of thought process or school of thought is that we do, perhaps we do continue making our way up here. At some point, we give it back into, say, October, and come back down here. Now, I had been saying 3,400 if we get bad news and we take out this low, 3,400. I don't know. That's still in the cards, I think. It's still absolutely possible. I just don't know. And if the market was not so forward-looking, I would think we're a lot more vulnerable. But this looks pretty good. So, the best thing for us to do is continue to look to the upside until the trend breaks one way or the other. Right now, the trend is up, and everything looks good. The trend was up here, and everything looked good until right there, and we rolled over. So be careful. Right here again, trend up, 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 up. Everything's great. We're going to go back up here, and then we didn't. And up here, up, 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 up. No. Up, 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 no. Up, 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 up here. I don't know. Again, the way that I trade it is more from a selling premium, that type thing. So most of my trades are 200 points wide or something like that. And so, I'm not really trying to pick a direction. I'm really trying to trade it as neutral as possible. And that's been working well all year, actually. Trading this elevated volatility. Now, the VIX has come back down. We're under 20 now, so that's a pretty good milestone for the VIX. I need to keep an eye on that. And we're at 19. We closed at 19.74 today. That's as low as we've been in quite a while. So one or two things happen here. Of course, this trend is confirmed and we keep going higher, or we break and resume the lower move. And again, that looks less likely right now to me. So I wish I had something more specific to show you, but I don't, just because we're really in a could go either way position. I think if we do go higher, I think our next target would be this skyline, and then perhaps that snow line. Getting back up here, even with things looking better, I don't think that's really this is really in the cards, at least for now. So we play it as we have been playing it, shorter time frames, limit our risk until more of the smoke clears and we can figure out what's going on with this overall market. So that is what I've got for you. Hope it helps. Keep an eye on the data points coming in, and we'll see what we get tomorrow morning from PPI, and we'll see what we get next week, and then see if we can figure out what the Fed's going to do. And at that point, we should have, by that point, of course, we should have even in the next couple of weeks, we should have a trend in place, I would think, one way or the other. So take care, be careful out there, limit your size, and I will see you guys at the next update. Thanks.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me